I'm Alison from FX Scout. So in this video, I'm going to be talking about a subject that many traders discount as less important than they realize to their trading. And that is dealing with trading psychology, or dealing with your negative emotions when trading. Now, no matter how strong or level-headed you are a human being, and so you have emotions. And these emotions will influence your thinking and will influence your behavior as a trader. So the most common emotions that traders experience are fear, greed, and hope. Now, most of you watching will probably be aware of the effects of fear and greed on your trading, but not so much how hope can affect your trading. So fear comes in many forms, and it often is more prevalent in beginner traders. It causes a lot of anxiety and nervousness about placing trades. And the reason is that many beginners don't have a trading plan, or they don't understand the factors involved in trading, and they don't have a very good feel for the markets. When you are feeling fearful, you often open trades without any conviction, and as a result, you often make bad decisions. These include overthinking the trade or exiting it too early. It also could be overtrading to recover losses. It can cause you to chase bad positions or add to your losing trades, or open much larger positions than you usually would. Now, I experienced this many times when I first started trading. I would find the setup, I would find the trigger, and I would open the trade in what I thought was the right direction. The trade would be going well, it would be heading towards my take profit, and suddenly, on the back of bad news, the trade would reverse direction. It would then hit my stop loss, and instead of me just walking away and accepting the loss, I would then go on an overtrading tirade. And the problem with this is it led often to much larger losses than I would have experienced had I just let that first trade go. Another very obvious cause of fear is trading with very large position sizes. Trading with high volumes magnifies volatility and your potential losses unnecessarily. This can obviously make you trade more nervously because now you are afraid of making much bigger losses. And so again, you start to make very bad trading decisions. Another very common emotion that affects many traders is greed. Unlike fear, which is more prevalent in beginner traders, greed is a constant companion for traders of all experience levels. After all, we trade Forex to make money, and greed is a natural extension of that desire to turn a profit. But it can have a huge negative effect on your trading. And although greed is different to fear, it can produce as much hardship, if not more. For example, how often has it happened to you that you became risk-averse during a profitable trade, but risk-seeking during a losing trade? This is one of the worst decisions you can make from a risk management point of view, and it causes many traders to lose money. So the goal is to close your losers quickly and let your winners run. Now, greed has appeared many times in the financial markets. One time was during the dot-com bubble, where individuals bought more and more internet stocks and inflated their value tremendously before it all came crashing down. A more recent example is Bitcoin, where investors piled into the crypto thinking it could only increase in value before it too came crashing down in 2021. Interestingly, during the crypto crash, the greed factor was labeled FOMO, or fear of missing out. But fear wasn't the main driver in this case, greed was. And lastly, we'll look at hope. So contrary to what most people think, hope is a very big negative emotion in trading. Hope is all beginners have when they open a trade without a trading plan or without understanding the market. So how do you control your negative emotions while trading? Setting up a trading plan is key if you want to keep negative emotions out of your trading. There isn't just one way of being profitable. There are many strategies and tactics you can use, but you need to create a systematic approach in order to be consistent with your trading. I'll put a link to other videos that we've created on strategies that may work for you. Next, you want to create your own set of personal rules that you can follow when you trade. These may include which time of the day you trade, which time frames you trade, which instruments you trade, which indicators, if any, you look at, which candlestick patterns you trade, rules for checking various support and resistance levels or previous highs and lows, and then of course how these come together to determine your exits and entries and where you should set your stop losses and take profits, depending on your risk tolerance and other factors that may be present. Many people spend a lot of time creating these rules. They spend time on a demo account testing these strategies out and back testing their various strategies before they define something that works for them. Then another way to keep your emotions out is to trade the right market conditions. For example, if you're a technical trader and there's been a big geopolitical event, stay away from the charts. Don't trade something that you don't understand or that you don't fundamentally understand. One of the easiest ways to decrease the effect of fear on trading is to lower your trade size and lower your leverage. We always recommend that traders start with very low leverage and increase their trade size and their leverage as they become more experienced, and to only risk 2% of their capital per trade. Then you want to use an economic trading calendar and a trading journal as part of your trading plan. In terms of fundamental factors, planning for various outcomes in the run-up to key news will be an important part of any attempt to avoid negative emotions. If you know that the markets are going to react to an event, it's much easier to prepare for it emotionally if you know when the event will occur and the impact of that event. And lastly, probably one of the most important factors is to manage your risk effectively. Set your stop losses and take profits, and if you cannot control yourself, walk away from the charts and let them be. And finally, relax. If you are relaxed and you can enjoy your trading, you will do much better. You also need to sleep well, you need to eat well, you need to exercise, and you need to find a space where you can calm your mind. Thanks so much for watching. If you have any questions regarding negative emotions in trading or how to manage your trading psychology, please don't hesitate to contact us. Our website is fxscouts.com, or alternatively leave a comment in the comment section below.